Welcome back, and shifting focus now to Ola Electric. The company says that it has completed the implementation of its network transformation and OPEX reduction program and delivered the cost reduction of 90 crore rupees per month. To discuss this and more, we are being joined by Harish Abichandani, who is the CFO of Ola Electric. Harish, good afternoon. Thank you for joining in. Firstly, congratulations on completing this implementation. And if you could elaborate more on this, that how much would this reflect on your bottom line as well? Would you have given a guidance that your automotive business will be EBITDA positive in the first quarter of FY26? Tell us more on that.
Yeah, Shona, thanks for having me on the show. I think our path to profitability journey began, since quite some time. We have spoken about it in our Q2 and Q3 numbers, and a lot of work can happen in the back. As you see our today's disclosures, a significant rationalization of cost, efficient across multiple processes, whether it is on the front end, whether it is on the operations, etc. All this culminated into a significant cost saving on a structural basis and a steady state basis. This will be reflected in the Q1 numbers, as already mentioned today. So we see the impact coming in quarter one of FY26.
Okay. The other question which we want to ask you, Harish, is that in this press release, you've also indicated that by Q1 FY26, we can see EBITDA break even in this particular segment. We recall that last time you had joined us, you told us that you would reach EBITDA break even once you hit the landmark of 50,000 monthly deliveries. So can we expect that by Q1 you will be hitting this particular number, or will the EBITDA break even be achieved by other means?
Yeah, see, we had discussed this 50,000 number of turnover while we were discussing our Q3 numbers. And that was a certain based on a certain cost structure prevailing then. We always had a path to path profitability, and since then we have actually done significantly more on the cost than even envisaged and planned. So we've done a lot more on the cost side, and I think the goalposts accordingly could shift positively towards profitability much earlier.
Harish, you've also mentioned that your new initiatives have resulted in reducing your average vehicle inventory to 20 from 35. Do you see that number trending down further? And how has demand looked like in this month for the month? We're almost halfway through March. How has demand looked like on ground?
2 points to raise in terms of how the delivery schedule with the customers. Ideally, one would like to deliver to the customer the scooter in 24 hours. That's the customer's absolutely platinum standard. Now, there are certain processes, there are certain requirements from a local regulation perspective. We have significantly transformed our network design. We have almost eliminated a layer in the network design of the distribution centers, moving inventory much closer to the customer through our stores itself. So hence, this has resulted in this significant reduction in delivery time. This will continue to significantly drop given as the network matures and this process continues to grow. So we see this further coming down from 12 days. And personally speaking, I would want to deliver a customer the scooter the same day. That should be the target. But yeah, this continues to go down. On your question on demand, I mean, you see our Jan and Feb numbers. We have maintained our market share leadership over Jan and Feb. Feb, we are at 28% market share on sales, and March trend is almost similar and if not better as we go into the last 2 weeks of March, given that the subsidies are expected to drop effective April 1. So we see continued customer interest and engagement on our products, significantly momentum going into the last 2 weeks of March.
To deliver a scooter on the same day, Harish, would you want to partner with a quick commerce platform to do that?
Why not? And we have an Ola consumer business which can do it for us.
Absolutely. Harish, the other question which we want to ask, and something that's discussed quite a lot, is the issue of market share. Where does market share stand currently? And aspirationally, FY26, as well as realistically rather, FY26, FY27, how do you see market share trends move?
See, I think the market share is an outcome of multiple things. And one is, of course, the product portfolio. Our motorcycles are coming. We have spoken about it. We have showcased it. It's on the road. We can test drive it. So the motorcycles are out there. They'll start deliveries will begin end of this month or very early April. So we are on track to significantly expand our product portfolio. And market share is an outcome of continued expansion of distribution and our products on ground. We have reported market share of 28% for February. We continue to see strong momentum going into March also. And with newer products, this will only get better going into the new financial year.
Based on all of this, how do you expect sales to pan out in FY26? Harish, have you set a target for that?
I can't disclose my sales targets for FY26, but yes, as we mentioned, path to profitability is something we will deliver by Q1 of FY26.
Thank you so much, Harish, for joining us. We wish you all the best as you head into FY26. Thanks once again for joining us. Let's now slip into a short break. We'll get him on the markets and stock-specific action on the other side. Stay tuned.